Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 1st of February 2020, and we're publishing our gold and silver weekly update for the week ending the 31st of January. Gold rose $18 last week from $1,571 to $1,589, having hit a high of $1,590 and a low of $1,563. In sterling terms, gold finished the week at £1,203, that's up £2. And in euros it closed at €1,432, that's up €7. Silver fell 8 cents, from $18.11 to $18.03, having hit a high of $18.34 and a low of $17.35. In sterling terms it closed at £13.65, that's down 20 pence. And in euros it closed at 16.24 euros, that's down 0.17 euros. The gold to silver ratio rose from 86.7 to 1 to 88.1 to 1. The Dow Jones closed on Friday at 28,256, down 603 points on the day, substantial move, and down 733 points on the week. And the NASDAQ closed at 9,150, down 148 points on the day, and down 164 points on the week. And the S&P 500 closed at 3,225, that's down 58 points on the day, and down 70 points on the week. And markets across the globe suffered similarly, in percentage terms. Brent crude closed at $56.62, that's down $4.07. And WTI crude closed at $51.56, that's down $2.63 on the week. Hopefully, these figures will be showing at the pump prices in the not-too-distant future. The dollar index stands at 97.39. That's down 0.46 for the week. Now, we concluded last week's update with the following words, quote, "So we are expecting slightly firmer precious metal prices next week, or certainly for the start of the week, with Jerome Powell setting the tone midweek." And to some degree this is what happened, but particularly so for gold. Gold did open up immediately last Monday, then fell back just prior to the Fed's announcement, and then rose again quite sharply. This happened for a number of reasons, but the main two being the spread of the coronavirus, now beginning to seriously affect equity markets, including 2 cases being found in the US, but many deaths in China, and a growing number of infections around the world, in a number of additional countries. And secondly, the relatively dovish position taken by Fed Chair Jerome Powell. Now, we say dovish because even though the language appeared tough, supported by a unanimous FOMC board decision, Powell did make the comment that he was disappointed that inflation was nowhere near their 2% target, and that one should not regard 2% as the peak objective or the ceiling, just the average one. So please mark our words. This is a precursor to lowering rates, but we believe later as opposed to earlier in the year. And we have produced over the past week a number of videos on this very subject, and we've put links in the description box below. Now that said, the coronavirus without doubt has had the greatest effect, and especially so when the World Trade Organization on Thursday announced that the virus was now a global emergency. With stock markets in quasi-meltdown on Friday, just before the close, the head of the Center for Disease Control told the American public that there is very little risk to the American public. Now, we shall see how that plays out on Monday morning, whether the statement is sufficiently reassuring or not. Now, economic data announced on Friday showed the personal income for December was up 0.2%, against expectations of 0.3, with consumer spending and the core price index all being reported as expected. But the regional Chicago PMI for January, though, was well below expectations, coming in at 42.9 compared with 48.9 in December. Now, technically for gold, there is resistance at the 1600 level and support at the 1500 level. And we have stated for some time that gold prices will oscillate between these two figures. We're now upgrading this from 1550 to 1650, as the coronavirus issue still has some time to play out, and gold rose near to its week's high on Friday, and this could indeed follow through on Monday, or certainly early next week, if not Monday morning. Silver markets moved in similar direction to gold, though underperformed it and closed down on the week by just under 0.5%, but did strengthen again after Wednesday's Fed announcement and began a recovery late on Friday. Now, we're still holding our $17.50 to $18.50 range for silver, with $17 and $19 being what we term extreme outliers for the next week or so. There is some evidence of support at $18, but this level has been breached below quite a few times, and our firm support level is therefore 17, and moderately strong support at $17.50, with strong resistance at $18.50. Though, again, depending on what's announced, we would not be surprised if that is breached this week. Taking a look at what economic data this coming week is likely to have an effect, we have on Monday the market manufacturing PMI and the ISM manufacturing PMIs for January, construction spending for December, and motor vehicle sales for January. On Tuesday, we have factory orders for December. Wednesday, ADP employment report for January and the ISM non-manufacturing index for January, and the trade deficit figures for December. On Thursday, productivity for quarter 4 and unit labour costs for quarter 4 are being reported. Friday, which is the most important day of the week as far as data is concerned, and certainly as far as markets will be concerned in watching, we have the non-farm payrolls, the unemployment rate, and the average hourly earnings figures all for January, the trade deficit for December, wholesale inventories, and consumer credit figures for December. So like last week, a week full of economic data to digest, with Monday and Wednesday, and particularly Friday, being the most important days to note. Now, to be absolutely blunt, the spread of this virus is dominating the headlines at present. And we have seen equity markets across the world fall as each day the death toll and infection rate increases. Even today, Saturday, Russia has announced that it will evacuate its citizens from China next week, as the death toll now stands at 259. Now, late yesterday, we published a discussion with controversially Greg about Brexit, because 31st being the last day the UK was remaining in the EU, and also about this virus. And as Greg pointed out, we should be optimistic, but should not underestimate its devastating potential. Now, we are not alarmed at this moment. However, it does make assessing precious metal prices from an economic standpoint extremely difficult, as during such crises, fundamentals mean little. And we have to factor in very heavily the fear factor as capital moves from higher risk assets into what's deemed safety or secure assets, such as gold, silver, precious metals, bonds. So we have to factor this into the equation once again, which is a very difficult figure to evaluate or even estimate. Now, we are very likely to have high precious metal prices continue next week until greater clarification is received as to what levels of containment, if any, is achieved, and this may take more than 1 week to pass before that detail is known. Also, please bear in mind that silver prices, whilst benefiting from the monetary demand for the precious metal, and especially it being linked in that way to gold, it may indeed suffer, certainly on the paper markets, from what could be perceived to be the industrial demand diminishing as global trade is adversely affected. And whilst we believe that the upward momentum will be greater than the downward momentum, we also believe at this stage that it won't be as strong for silver as it is for gold. And we could easily see the gold to silver ratio move back into the 90s again very soon, if that assessment is correct. So thank you so much for listening. We have placed below links to the various videos we produced this past week, which we think are relevant to the overall discussion and assessment for prices next week. And if you haven't already done so, kindly subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.